Hello everyone. Today in this module we will be learning about the preparation of income and expenditure account of a NPO. What is income and expenditure account? It is the summary of income and expenditure for the accounting year. Just like in case of business organizations, we prepare profit and loss account. In case of NPO, we prepare income and expenditure account. So it includes only revenue items, and balance at the end represents surplus or deficit. If the credit side, that means the income side, is more, then the balancing figure will be surplus, and in case debit is more, that means expenditure is more than the income, then the balancing figure will represent deficit. Now, what are the steps in the preparation of income and expenditure account? You will be given receipt and payment account in the question. Just go through receipt and payment account thoroughly. Then exclude the opening and closing balances of cash and bank, as they are the asset, not item of income. Exclude the capital receipts and capital payments, as these will be shown in the balance sheet. Consider only the revenue items. Revenue receipts, these will be shown on the income side, and revenue expenses, these will be shown on the expenses side, expenditure side. Then we have to go through the adjustment carefully. We have to make adjustment for outstanding expenses, accrued incomes, expenses paid in advance, and incomes received in advance. And don't forget to consider the non-cash items like depreciation of fixed assets, provision for doubtful debts, profit or loss on sale of fixed assets. Now we will take an example from the receipt and payment account. Prepare the income and expenditure account of Clean Delhi Club for the year ended 31st March 2017. You have been given the receipt and payment account of the club. Just go through this account carefully. Receipts amount, payments amount. These amounts are being given to you. Just go through these items very carefully. Then on the receipt side, find out those items which are revenue in nature. Like for a NPO subscription, that is revenue in nature. Regarding entrance fees, we already have studied that entrance fees, if nothing is specified in the question, then we will assume it to be the revenue receipt. Next item is donations. Donations not specified, so it is your general donation, and amount is small, so it will be of revenue nature. Rent of the whole, it is again revenue in nature. Sale of investment, that is the capital receipt. That means it will not be shown in the income and expenditure account. Then on the payment side, salary is shown to you, rent, electricity, taxes, printing and stationery, sundry expenses. These are the revenue expenses. So these will be shown on the expenditure side. Books purchased, books are revenue expenditure or the asset. These are the assets. Similarly, government bonds purchased. These are the investments. These will be shown where? These will be shown in the balance sheet. Fixed deposit with the bank, again an item of balance sheet. Balance carried down. So with the help of these items, we will prepare income and expenditure account. And the income and expenditure account will be like this. First you will write down income and expenditure account of name of the club. You will write down for the year ended 31st March 2017. On the debit side, you will show expenditures. On the credit side, you will show all the incomes. Like all the items of incomes we have shown over here, and all the items of expenses we have shown over here. Income side is more than expenditure side, so the difference will be surplus. This is how you can prepare the income and expenditure account when no adjustment is given in the question. Now let us take the same question with some adjustments. This question is being given to you. Same question. 3 adjustments are being there. On 31st March 2017, subscription outstanding was 2,500. Now what you have to do with this amount? This will be added in the subscription. So total subscription shown on the income side will be 22,500 plus 2,500. Taxes include rupees 200 paid in advance. These rupees 200, these belong to the next year. So from taxes, this amount will be deducted. On 1st April 2016, the club owned a furniture of 20,000 and we have to provide a depreciation of 10% per annum. During the year, there is no sale or purchase of furniture. So at the year end, total amount of furniture will be 20,000. We will have to provide a depreciation of 10%. That means rupees 2,000, which will be shown on the expenditure side. And here you go with the income and expenditure account. It will appear like this. Just focus on this item, subscription and outstanding at the end. That means these are the subscription which are related to this current year, but still these are not received. Being current year income, these will be added in the subscriptions. Now taxes, total 1700. Out of this, 200 belongs to next year. That means 200 doesn't belong to current year, so these will be deducted. Then we have shown the depreciation. Depreciation on furniture rupees 2,000. Then again you will compare both the sides and the difference will be surplus or deficit. Like in this question, income is more, so the difference is surplus. So this is how we can prepare income and expenditure account of a NPO. Just you need to remember that in income and expenditure account, we will show items of revenue nature only. Items of capital nature like life membership fees, purchase and sale of assets. These will not be shown in the income and expenditure account. This is all about the preparation of income and expenditure account. In the next module, we will study some more questions about the preparation of income and expenditure account. We will study about more adjustments. Then we will study about fund-based accounting. That's all for the day. Good day to all of you.